Global markets just took a hit. Stocks, crypto, and oil, all sliding together after two powerful forces reignited investor fears. 1. President Donald Trump's sharp remarks on China trade, reopening old wounds between the world's two largest economies. And 2. Jerome Powell, hinting that an October rate cut is looking more likely. Tonight, we're unpacking what's really happening, what it means for your portfolio, and where markets could go next. Market overview. It was a rough day on Wall Street. The S&P 500 dropped 1.4%. The Nasdaq shed nearly 2%, and the Dow Jones lost more than 450 points. Meanwhile, Bitcoin slumped below $110,000, its lowest level in weeks, and Brent crude oil fell back under $62 a barrel, wiping out its recent gains. Investors are suddenly nervous, not because of one headline, but because two stories collided, one political, one monetary, both capable of shaking global confidence. Trump's remarks on China trade. Let's start with President Donald Trump. During a campaign event, the former president warned that if China continues what he called economic manipulation and unfair trade practices, his administration would respond strongly and immediately. Markets heard that loud and clear as a potential return to trade tensions that defined much of Trump's first term. Remember those days? Tariffs, trade wars, supply chain disruptions, all of which rattled corporate profits and global growth. So when investors heard that familiar tone, they immediately priced in the possibility of new tariffs on Chinese goods. That sent tech stocks, semiconductors, and industrial names, all heavily reliant on Chinese supply chains, sharply lower. Markets don't like uncertainty. Trump's remarks reminded everyone that U.S.-China trade policy could once again become unpredictable. Powell's comments and rate cut expectations. Then came Jerome Powell, and his comments sent another wave through the market. Speaking at a banking conference, the Fed chair said, "Inflation has eased notably this year, but the labor market is softening faster than expected. The Fed remains attentive to downside risks. The Fed is preparing to cut rates, possibly as soon as October." That reinforced what traders have been betting on for weeks, that the Fed will pivot to stimulus mode to prevent a slowdown. But here's the catch. A rate cut might normally lift stocks, yet investors see it as a warning signal that the economy may be weakening faster than policymakers admit. So instead of celebrating lower rates, markets are bracing for a sharper slowdown. Global ripple effect. The reaction wasn't limited to the U.S., Asian, and European markets turned red overnight. The U.S. dollar strengthened as investors sought safety, and emerging market currencies, from the yuan to the peso, felt the pressure. Meanwhile, oil prices dropped amid fears that a U.S.-China slowdown could dent global demand. And in crypto markets, risk sentiment soured fast, leading to broad liquidations across major tokens. In short, money rushed out of risk assets and into safe havens. Treasuries rallied, gold ticked higher, and volatility spiked. What it means for investors. So, what does all this mean for you, the investor? First, volatility is back. When politics and monetary policy collide, markets move fast and often overreact. Second, watch for rotation. Defensive sectors like utilities, healthcare, and consumer staples could hold up better. Tech and growth names, especially those tied to China, may stay under pressure. Third, timing the Fed becomes key. If Powell's October cut materializes, we could see a short-term rally, but only if data supports a soft landing, not a full-blown slowdown. And finally, remember, markets often fall on fear and rise on relief. Today's sell-off could look like an opportunity if cooler heads prevail. To recap, Trump's China comments reignited old trade fears, Powell's words signaled a possible rate cut, and investors, caught between political risk and economic caution, hit the sell button. As always, the story isn't over. If the Fed moves next month, or if trade rhetoric heats up, Expect more volatility ahead. We'll be watching closely, and we'll bring you timely updates as this unfolds. If you found this breakdown insightful, hit that like button, share it with a fellow investor, and subscribe for more deep dives into the financial forces shaping our world.